Okay guys, let's get started. It's Saturday, August 27th. My name is Dave Coker, and this is Talking About Finance, where I present typically 7 slides representing the past 7 days. We get a little carried away sometimes because we love talking about finance. So, this is an all Bitcoin edition of Talking About Finance. But before we get started with crypto, let's look at the S&P 500 like we always do. And stick with me. S&P 500, Bitcoin, yes, there is a theme there. So let's go. It's a bank holiday weekend here in the UK. We were in London at Tate Britain, taking in a show I wanted to see, Walter Sickart. Then we headed out to Romford for dinner, so as usual. We're home for a brief stop, then we're out and about, carousing and clubbing until we greet the dawn out on the coast. Last week I was covering Jackson Hole for one of my banking clients, and I noted Jerome Powell and the Fed had a massive credibility problem, and here's why. Last year at Jackson Hole, Powell said that not only would inflation be transitory, but it will also be high, would not get too high. Remember that? Transitory. Inflation is transitory. Inflation won't get too high. Well, look at us now. See, he has a massive credibility problem, and yesterday it seems he doubled down. He kept babbling about how 2% inflation was the Fed's target. Ain't gonna happen, Jerome. The world's a different place. And his commentary promptly cratered the markets. Now, personally, and speaking where I'm putting my money, I noticed that 1,000 points on the Dow is a little bit of an overreaction. I only say that because I've been receiving dividends all month. And next week on Thursday, September 1st, I'll be buying stocks. I bought Bitcoin yesterday, I bought Ripple Thursday, so I'm not changing my behavior at all. I don't care what Powell has to say. We'll talk about the Fed in a minute. Buy and hold is our mantra. It's what we do. The S&P 500 was down 4% on the week, and now it's down about 14.9% year to date. Thanks, Mr. Powell. The VIX traded up from 20.6 to 25.56. It's almost one standard deviation up. The 10-year note was flat on the week at 3.02. It's up 1.5% year to date. So Treasury's creeping back up, driven by Mr. Powell's hawkish comments.
Why is my sister sitting down there?
Oil closed the week at 92.92, up about 2.7% week on week. It's up about 23.5% year to date. Big losses last week, lots of negative news, guys. It was really interesting. So once again, my friends, we're moving into the breach. Where others sell, we buy. Where others move to cash, we dump our cash. We buy stocks, we buy bonds, we buy Bitcoin, we buy Ripple. We dollar cost absolutely everything. We're share price indifferent, and yes, many calls us psychopaths. Well, I don't care. I'm a psychopath by that metric. No matter what is going on in these markets, I buy. Week in, week out, I buy it all. Anything that's for sale. You can do this too. If you do this consistently, if you do it long enough, ignoring market volatility, you one day will be amazingly rich. And your cash, nothing but trash. Keep your cool. Choose your shots. Dollar cost average and invest the money. It's the only way to be sure. So Mr. Powell has a real massive credibility problem that goes beyond him. It's actually the entire Federal Reserve in my view. What I've done here is I've taken a chart and I'm looking at the purchasing power of the US dollar from 1913 when the Fed was formed all the way up to the present. And my gosh, the US dollar's lost 99% of its purchasing power since 1913. Do we really have to listen to Mr. Powell? I don't think so. I've got a real problem with that type of behavior and that type of commentary that he puts out and just crashes the markets. They don't have that much credibility, in my view. We're going to talk about Bitcoin. I've got 7 slides about Bitcoin, different models. Now, this is off Fidelity, actually. Remember, Fidelity's got, and I've talked about them on FinTech Flash News a fair amount. They've got a fairly large division called Fidelity Digital Assets. And what they've done is they've come up with a model where they're looking at the demand of Bitcoin over time. Horizontally, we got time. Vertically, we got the forecasted or the actual price in many instances of Bitcoin. And you can see when we take a look at this, roughly what they're saying is by 2025, we should be at $100,000. Now, I never really like to get into level estimates. I buy Bitcoin every week, and I've been doing it for years. because I'm pretty confident at some point in the future, Bitcoin will be worth more than I'm paying for it now. Another model, this is from ARK Investments, Cathie Woods hedge fund, or funds, I should say. And what she's done here is very clever. She's decomposed Bitcoin into certain drivers, certain purposes that it can be used for. So you can see starting at the top, we've got remittances, emerging market currencies, economic settling network, all the way down to digital gold. And for each use, take a look at digital gold. She forecasts Bitcoin as having 50% of digital gold's total market cap. So if you take all this stuff together, she forecasts 1.36 million. I'm sorry, I'm getting excited. She forecasts 1.36 million for the price of a Bitcoin by 2030. Again, different model, different group of people, different numbers. Just keep an open mind, guys. A third model from Cane Island, the digital research division. And what they're doing is this is very clever as well. They're comparing the adoption of the internet to Bitcoin's price. And somebody had the insight, I can't remember the analyst's name there, had the insight that Bitcoin's adoption was mirroring that of the internet. And in fact, if we take a look at the internet's adoption over time, if we forecast that forward and lay Bitcoin's price on it, it seems by 2030, we're looking at a price closer to $1 million than we are to 100,000. But again, a very bullish forecast for the price of Bitcoin. This is the power law corridor model. Same approach, guys. Horizontally, we've got time. Vertically, we've got price. And what we're doing is we're looking at the channel, the trading channel, for all intents and purposes, resistance and support lines. If you're a TA person, in the middle, the dark red line, we've got the average straight through. And you can see over time with the support line at the bottom and the resistance line at the top. Once again, when we forecast this out to 2030, we're looking at a price of Bitcoin north of 100,000, less than $1 million perhaps, but still, it's an interesting model to consider. And then down here, we've got Breedlove's model. I don't know too much about this guy. I believe his first name's Craig. I got to dig into it a little bit. But what he's done is he's taken a look at nominal appreciation and Bitcoin nominal appreciation. Really sort of cool. So what we're doing is we're taking, in 2021, we've got $1 million cash. He forecasts that forward at a nominal rate of inflation. I'm not exactly sure what rate he's using, but I think we would all agree that $1 million today, in terms of purchasing power, will be worth less in 2031. Now, when we take a look at it and we take nominal appreciation, in other words, just the base rate, the base interest rate, over time, we can see that the million's actually worth more in 2031. God bless. We would hope that would be the case. But compare it to Bitcoin. And if we take a look at Bitcoin's nominal appreciation over time, the same type of model, same type of forecast, he comes up with 12,500 million. Once again, that's 12.5 million. Really, really wild. And as I said, this just popped up about 2 weeks ago. I don't know a great deal about it, but we'll consider it. We'll take a look at it. Oh, and here we go. This, of course, is PlanB. And check out his work if you haven't seen him on Twitter. I posted a fair amount about his stuff. Now, he's got an interesting model here. Of course, he's a quant, and he's done some on-chain analysis. And you can see here, the way you read this is on the right-hand side, you see the scale. Dark blue all the way up to bright red. And what he's doing is he's looking at the Bitcoin that's been purchased and that remains on-chain that is at a loss. Got it? Okay? So all he does is he looks at the chain, he looks at the holdings of Bitcoin across the entire blockchain, and he figures out what percentage of these coins held in wallets is in loss. Check this out. Really, really wild. You'll notice whenever Bitcoin's loss drops down to the blue, we tend to see Bitcoin spin up. So we see that over there in 2011. We see it also in 2015, 2016. We see it also in 2019. We see it also in 2020. Oh, and where are we now? Yeah. We know a lot of people. I think it's as high as 65% of people who own Bitcoin presently have bought it over the past 2 years. You've been buying it for more than 2 years. Good on you. Buy and hold. It's the only way to be sure. Don't try to trade this stuff. And over here you can see that we've got, once again, we're at 40% of Bitcoin on-chain is in the loss. And according to this model, PlanB's model, it should bounce back. And finally, the Bitcoin, the original stock to flow model. Now he's come out with a little bit different implementation. First of all, let's take a look at this. Horizontally, we got the same as before. We're looking at time. And vertically, we got the price of Bitcoin. The red dots illustrate exactly what Bitcoin is worth over time. And then the gray line represents the original stock to flow model. And remember, I've got a lot of time for this because this works for other commodities such as gold. And basically what you're doing is you're taking a look at the demand rate, and you're looking at how quickly it takes to replenish it at a certain rate. And check this out, guys. You can see that the stock to flow model worked pretty well until 2020. And then it sort of broke down. Now, I've still got faith in the old model, but it's okay. We'll see what happens there. He's come up with a new model, and based on what he's doing there is he's taking a look at the 18-month average stock to flow price minus the ratio. And once again, when we forecast this out to 2030, we see yet another model is predicting Bitcoin closer to 1 million than it is to 100,000. With all these things, guys, they're just forecasts. It's not the rule of law. So what you got to do is you got to put some money in. Don't put any more money in than you could afford to lose. Put some money into it and see where it goes. Buy it, hold on to it. Don't be forced to sell. That's something that happens in the stock market all the time. People pile in everything into the stock market, and when they need money, they're forced to liquidate. And all too often, the way the market works, that position is down. They're selling at a loss. You don't want to do that. So put money in Bitcoin that you never expect to need again. It's exactly what I do every week. I buy a little bit of Bitcoin every week. I've been doing it for years. Dollar cost averaging, I don't have to sell. And yeah, of course the Bitcoin I've been buying for the past couple years, I'd have to look at the actual trades. Some of it is in a loss. I know what I bought Friday's in a loss. So I bought it at like 24 and I think it's down to 20 now. I don't care, because I'm going to hold on to it. And the Bitcoin I bought back in 2014, 2015, no, there's no way it's in a loss. My God. So just buy Bitcoin, hold on to Bitcoin, and you'll be fine. All right, guys, that's it. Have a great bank holiday weekend. Wife likes to take pictures. I'm very photogenic. We're going to head back out again. So you have a great bank holiday weekend, guys. Take care.